Globally, we are watching as the economy decays. At the same time, stocks are hitting record highs. You came here for the truth, so let me unveil that for you. Today, we will demystify this disparity that has been occurring. So we'll move into this chart first. European stocks, we're looking at the Stocks 50 specifically, versus the forward earning estimates. And you can see how as soon as the crisis began occurring, there has been this disparity in between these two factors. So the stock market, of course, should be a representation of the real economy. However, it is absolutely not the case. Now, why has it been increasing? Well, clearly we've had large amounts of monetary easing taking place in every country around the world. The ECB has tried to inject a few more trillion into the economy to get it going, and it has been, at least in the short term here, been pushing the stock prices higher, trying to get past the previous levels. And of course, you can do that simply by devaluing the dollars. It makes it look like everything is just fine. So we know what happened in the US with that. And this right here is an image of Greece. Give Greece a chance, they say, and there are many people gathered there in support of their new government, and of course they are really against the austerity measures that have been taking place. They do not want the Troika. They do not want the IMF dictating economic policy, and they of course are not wanting the EU making the laws for their own country. But that still is interesting to note, that they do not want to leave the Eurozone, at least this current government. It's probably too much of a radical change, but it seems like they're really backed up against a wall right here. So let's talk about that for a moment as we see this article out of Reuters exclusive. Rising deposit outflows and precaution behind extra Greek bank ELA access. So the European Central Bank allowed Greek banks access to extra emergency financing from the Bank of Greece. So of course, they initially said that they would not take any extra money. Now they're coming out and saying, look, we'll take it from the ELA and we will not take it from the Troika. We do not want anything to do with them. And they, if I'm not mistaken, gave 5 billion of the sources here from the ELA. They said that this was specifically because of deposit outflows have picked up. And just in case you're not aware of what that means, that is the beginning of a bank run. So if the banks are running out of money, well, you just keep on pumping in the money from the other side, and that will supposedly fix the problem. They said they make sure they have liquidity while tense talks take place in Brussels next week, according to these Greek banking sources. You can read on right here what they said specifically. However, I'm going to move on and just wanted to note that bank runs do occur. They are real, and this is not some sort of fiction used as some sort of fear mongering. In my book, I talked about this. In 2011, repackaging of the debt of Greece with others with a date further into the future is their solution. You don't need to be an economist to understand that pushing the debt further into the future isn't going to solve their problems. It only delays the inevitable, and you've heard the cliche before, you're just kicking the can down the road. This is what happens when you just try to restructure the debt. You're never going to get rid of it. What they do is they take all of their debts and they package them up into some sort of investment, as they call them, and try to get investors to buy them up so that they will take it off their hands. But if you always have a system that pulls you deeper into debt, you're never going to be able to get out of it. And that's what's worrying to me, particularly in Europe, not even to mention what's happening in the US. That is a mathematical impossibility, but here in Europe it is definitely where our eyes are right now. Let's go into more of this. As you see, the German stocks, the DAX, and between the two, and no matter what happens with any of the news that comes out, as long as they print enough money, you can have the stock market rising. Look at in the US, where I've covered here before, where they give incentives to other central banks to buy up their shares. Look at the Central Bank of Switzerland saying we will buy unlimited amounts in order to prop up our markets. And then you see Japan doing the exact same thing. Many countries around the world admit to this publicly as if it's a good policy. That's what's very worrying. But if you look at the stock market, people are just elated at how well it's doing. Look at this right here. This is the week of the US stock markets showing you an increase, a straight line upward, because of course everything is just fine. It is time to celebrate. We can all buy our yachts thanks to Ben Bernanke and Janet Yellen. So this right here is just pretty obvious what's happening when there are so many bad investments out there. The hedge funds, all these investment companies try to find the one that's the least bad. So this week, it seems like it was the US, and it pushed it to record highs once again. And this is just something that we're going to cover over and over again. And of course, there is nothing good about the US economy at this point. Look at this right here. Import prices from Canada pushing back down to crisis levels. So the financial crisis, obviously, we have supposedly recovered from that, but we know it's anything but the case. So the reason I mention this is because specifically there have been countless indicators which I continually will bring up, but these indicators show us that we are heading to financial crisis levels, and of course, no matter what happens, they'll never admit that, but we'll bring out the news. We'll continue to spread this message, of course, because we're heading for the financial crisis part 2. There are many indicators from this. Let's move on right here. The Baltic Dry Index, not only did it go to pre-crisis levels, but in fact, we're headed back to decades old on this right here, moving back to 1986 on this level right here. We're looking at imports basically not taking place, I should say exports, not as much as they were before. Significant drops right here, and we'll see as it continues to head lower. This is something that is very volatile, that's for sure, particularly over the last few years. But it will be a very bad trend if this continues downward. This is important as well as we look at what's happening with oil prices. They did rise upward and have moved up quite a bit. We see that definitely with the gasoline prices, but the production seems like it has been maintaining itself all throughout this while. But the rig count, you can see how it has dropped dramatically. This goes for any particular commodity that you look at. It's not just with with oil itself. You look at any of the commodities, for example, gold or silver or whatever it might be, they have to open up new mines, and they also have to factor in the production costs for any particular mine or wherever they're getting this commodity from. And it's really a price comparison that they need to do. How much money are we going to make from this particular commodity, and is it worth actually getting started on new rigs, on new mines? And oftentimes, because if the price isn't reasonable, they're not going to begin, and in fact, in many cases, they end up closing the mines, closing the rigs, and this also affects not just the prices of that commodity, but all the way down the line. We have more unemployment in that case. We have real estate prices that are affected by that. We saw that in Canada recently. So look not just at the commodity itself, but all the interconnected dots. That's what this is all about. This isn't just what you watch on CNN and other sorts of propaganda in the mainstream media. You need to actually connect the dots for yourself. Don't just think inside this box. And this right here is something that is very important to me, and I hope that it would be important to you as well. We need to realize, what exactly does the future have in store for us? And I bring to you this article out of the Telegraph. Italy is a dying country as babies no longer replace people who die, according to the health minister. The country's birth rate falls to the lowest level since the foundation of the modern state in 1861. Now, if you do not have a nation that is replacing the existing people, you're going to have problems, for example, with Social Security, with the pensions, with all of these schemes that they've allowed to take place, all the different Ponzi schemes that are there in the system. You have a very big problem ahead. All of these around the world are essentially either redlining or actually in the negative. You look at in the US with the intergovernmental debt, and you need to factor in at what point does the country have to either begin printing money in order to get this going, or just claim some sort of bankruptcy, or they do reforms, or whatever it might be. The fact fact remains is that the way it's going today is impossible. It is a mathematic impossibility to ever pay back and ever work out. So we have an issue that is not realistic. You look at the stock market, sure, it's rising, but the economy itself is dying. And that is the disparity that will not be discussed. But of course, we'll continue to bring it out here at the Money GPS. If you found this video informative, please give me a thumbs up. And if you got to be a subscriber on the YouTube is very important, because I post practically every single day and we're covering all sorts of information from the beginners to the advanced, and it is very informative to those who have been watching. Thank you to all the new subscribers on here. And of course, don't forget to become an insider. The Insiders is where I give out all my best intel for free, and that is available at themoneygps.com. You just scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.